Hi everyone, see you again. Today is another interesting day because here we're going to listen from the experts, okay, how SMEs can do more financing, all right? And of course, there's a lot of channel for business funding. And today we are very honored to have, right, the speakers from Bursa to share about the listing and also, okay, we have one Hanita, then hi. And then we also have Chris, right? So basically from Koperasi. Today's topic, right, basically is very important because funding is the fuel to enable business operates healthy, especially at this current moment. Funds is really like the gas fuel for the vehicle to continue to strive. And then that's where the SMEs are caught by surprise during this time, right? A lot of them have cash flow issues, but some of them are doing much better before than the pandemic. So more and more local investors are basically they're looking into now the hot things, how this stock market, the price after another price, another height. So I think this is a very interesting time for a lot of SMEs to consider, right, go listing. Okay, so I think I would like to invite Miss Hanita, who's a senior VP for the primary market in charge of the listing development from Bursa. Hi, Miss Hanita, would you like to share with us?
Okay, I have a set of slide presentations about listing. Okay, let me share the slide.
Yeah, because listing is like the end game for a lot of SMEs. It's a very interesting
question. Okay, okay. This presentation about about the stock market, about listing on Bursa Malaysia. Later on, at the end of the slides, I will talk a bit more on the day market because I understand there's a lot of demand from SMEs to list on the day market. So hopefully, I can give you some clarification what listing is all about, the benefits of listing, and how to go about for listing. And after that, if you need to know more information on how to go for listing, you can contact my team. Without further ado, okay, this is some statistics on the hold on a minute. Okay, on the Bursa performance to date. Okay, let me just Bursa performance to date. I think all of you would have known since the MCO started, the market has been picking up volume. Okay, you can see in the slide there on the bottom right, we are at our record high ADV, ADV being average daily trading volume. So it's at our record high. For your information, companies, when they decide where to list, they will take into account on liquidity factors. So we are at our record high in terms of liquidity. So last week, there's a company, if you're familiar with IPO, there's a company called Optimax. They want to go for listing. The listing date is on the 18th of this month. So last week was the balloting for the IPO, and it was more than 80 times oversubscribed, which we hardly ever hear in our history of IPO in Malaysia to have that high number of oversubscription, which means the demand for IPO is really high now. So those who are ready to go for listing, thinking about it, so this is actually a good time for you to pursue that ambition to go for listing on Bursa Malaysia. Okay, on the next slide, this is a composition of companies by industries on Bursa at the moment. Okay, just now I mentioned about the statistic that I have earlier is on the market cap. We are at 1.7 trillion at this point of time, but this statistic at 1.55 because this is at 30th June. So you can see within 1 month it has moved a lot. We hope, okay, from this statistic here, you can see technology companies is only at 3%. So I think now with the new norm, I think companies should start thinking about digitalization, going into more automation. So we hope in the future we will have more companies within the tech sector to come on board. Okay, the next slide. Okay, now I go straight into listing process. This is a summary of who are actually the approving authority for listing in Bursa Malaysia. So we have the main market, we have the ACE market and the lead market. Securities Commission or the SC basically approves all listing on the main market, be it directly via IPO or indirectly via RTO, and all foreign listing on the main market goes to the SC. Registration of prospectus as well need to be done with the SC, which is currently required for listing on the main market and the ACE market. Whereas Bursa Malaysia is the approving authority for listing on the ACE market, lead market, and all secondary offerings, for example, rights issue, bonus issue, private placement of all the board for all the three markets. Yeah. So for all secondary offering, they have to make an application to Bursa Malaysia. Okay. The next slide. Okay. Basically, we have three markets. The main market for established companies is market sponsor driven for companies with growth prospects, and the lead market, which is advisor driven market for only sophisticated investors. I will talk a little bit more on the lead market later on. Okay, this is reasons to list, why company choose to list. Of course, there's various reasons why company choose to list, but the main factor is to raise funds, which is from listing. It's not just at the point of IPO. You can also raise funds after listing. So it's continuously, you can do that as long as you're still listed. And as a listed company, your shares is tradable. There's a market value attached to it. So with this value, you can actually use your share when you want to do an acquisition. Yeah. So in the past, as a private company, most probably you have to come up with a lot of cash to do an acquisition. But once you're listed, actually you can use your share because it's tradable. You can use that as a consideration for you to acquire, because some companies would rather go through organic growth, which may take longer, but some other companies choose acquisition route because that actually can be faster for them to expand their market share. So the next one is to retain key employees through reward scheme. When the employees are your shareholders, they can actually work harder for you, because when the company perform, it will translate into reward for them because they are also shareholder of the company. So it also enhance profiling and branding to enable the company to secure larger market, because once you're listed, it will attract more attention from media as well as analysts on the company. Okay. It also open to greater pool of investors, including strategic partners, because as a listed company, you have gone through all the process of going for listing. You have gone through the due diligence by the advisors, all the checks by authorities, be it SC or be it Bursa. So there's more confidence from your stakeholders, including strategic partners. So with this higher level of confidence, actually, you can invite more people to come on board and join you, and that hopefully will help in expanding the market for the company. It also unlock value of the company, because now performance of the company is reflected in your share price and market capitalization. If in the past, for example, as a Sdn Bhd, as a private company, your share price at RM1 per share, that's it remains as it is, because actually it's not traded, there's no liquidity afforded or share governance, transparency in the operation of the company. Okay. I will not go into too much detail unless because it will take a lot. Unless there's question later on this, then I will elaborate further. But basically, the summary of the requirements for the three market. Okay, as I mentioned, approving authority for the main market is SC, whereas for this market, and lead is with Bursa. Because this is designed for the SMEs, where we want to drive down the cost of listing and make it easier for the SMEs. The applicants need to only prepare information memorandum or IM. Do not have to prepare prospectus. Okay, all the submissions, okay, all the listing need to appoint an advisors. Later on in my slide, I will give a list of advisors that you can choose from. The admission criteria, I will elaborate further in the next slide. Basically, for the market, you need to fill a size, whereas for the ACE and lead market, we remove that requirement for minimum size. Moratorium, this is actually for the owner of the company. Okay, for the main market is 6 months, meaning the owner of the company cannot sell their shares in the company for a period of 6 months, whereas for the East market and the Lee market, because these two are younger companies where there's heavier reliance on the owner of the company. If you notice, some SMEs, actually the owner of the company is the one that do the marketing, do the accounts, sometimes even do delivery, do a lot of things. When there's heavy reliance on the owner of the company, the moment it's being listed, if we do not lock them up at the moratorium, the moment they leave the company, that's why for companies of Ace and Lead, because these are younger companies, we lock the shares of the owner under moratorium, which means they can't sell it. But don't be scared, we're not locking the whole entire shares of the owners. We will catch partial of it, part of it. So because the purpose is to maintain their commitment, yeah. So they can still sell some part of it. So for public spread, this is where the companies listed on the main market, 25% of the shares must be sold to the public, where minimum number of shareholders is 1,000, whereas for the East market, 25% as well. Minimum is 200 shareholders, whereas for LEAP, we really make it easy, it's only 10% without any number of minimum shareholders. So I would like to say here, companies that we have met, especially family-owned companies, yeah, they're very scared to list because they said they don't want to lose control. So you can see from here, the requirement is that you must have only minimum 25% to be held by public. So actually, when you're holding to 75%, there is a lot of control. You don't have to sell the entire stake of the company to the public. It's only 25%. So control can still be maintained. So, okay, again, just at the fine line at the bottom, in 2015, we liberalized the requirement for the East market if the company has main market track record. Because now we can see a lot of companies, large companies, yeah, they want to list on the East market because so recognizing that a lot of large companies wanting to come here, we liberalize the for them, whereas we cut short the moratorium instead of 3 years to only 6 months, and sponsorship period instead of 3 years to only 1 year. So okay, I know I'm going a bit fast, but if you want to can contact me or ask questions later because I don't have time. Okay, the next one, this is the criteria for listing, the admission criteria for listing. For the main market, okay, you can choose to list under profit test, which means your latest profit after tax, audited profit after tax, yeah, audited PAT must be at least 6 million. And uninterrupted means you cannot have like profit loss. Uninterrupted means continuous profit for the past 5 years, and when you add up the profit of these 3 to 5 years, is at least 20 million. So if you want to list under this profit test, you must fulfill this criteria. But bear in mind, if your core operation, for example, your core activity is in manufacturing, 6 million unit, yeah, actually include exceptional income, say for example from sale of assets, which is not part of your core business. So you have to take that out. Okay, so this is the criteria for the main market. You can also come under the market capitalization test. This is typically for companies that have not met the 20 million and 6 million test, but they may have certain license or certain project, certain trademark, for example, or patent that can command at least 500 million value at the point of listing. So these companies can actually come to list under market capitalization test. And then lastly, infrastructure project. Okay, so far not many companies that have listed under this, because this is typically for companies like, for example, Shabazz, Plus, highway, those with concession, because to come under this criteria of listing, you must have a project of at least 5 million running lah. Sorry, I'm so sorry. At least 15 years project period. So that's why typically only concession companies that come on board under this particular test, and the project must be worth at least 500 million. Okay, and also there are other financial tests that must be fulfilled by these companies to come on board. For example, positive cash flow from operating activities and no accumulated losses under the profit test. Okay, for A's and the main market, there is no minimum operating track record or profit requirement. But I wish to clarify, you may have noticed that most of the companies come on board under the A's market are profitable, even though there is no requirement to have profit. In Bursa, the rule is as such that you don't have to make profit, but because of the cost of listing, I clarify it, the cost of listing on the lead market is about 900,000. For the East market, it's about 3 million. Whereas for the main market, the average is about 4 million and above, depending on the size of the company. Because when you distribute more shares to the public, then the cost will be higher. Because distributing shares does involve some kind of cost brokerage, for example. So for the East market, because of this cost of listing, some small companies that can't go because of the cost factor may be able to list on the lead market instead. So what I'm trying to say is that even though there is no minimum requirement for profit, but some companies may not want to choose to list on ACE and go for lead instead because of this cost involved. Later on, I will talk a bit more about incentives that we have in helping companies to list on the on the ACE and the lead market. Okay, now these are other tests that we conduct. Public interest, basically your business activities cannot be illegal or have any that may have an impact to sensitivity of the public. Gambling, for example, may not be something that we encourage. Conflict of interest, this is to ensure that if you are the owner of the company and the company is involved in manufacturing of, say, shoes, and at the same time you also have another company also manufacture shoes but outside the group that's going for listing, so there is a conflict there. This is something that the owner of the company need to resolve before they go for listing, because we don't want the owner of the company after listing and then they have been given this huge award or huge contract and they are conflicted whether to put in the company that has gone for listing or in a private company which is outside the group. So we don't want the owner of the company to be conflicted in that manner. So as such, prior to listing, this issue must be resolved. And then the second one, conflict with advisors. For example, you have taken a loan from a bank and this bank is also helping you to go for listing, and part of the proceeds from IPO actually to settle the loan that was given by the bank. So actually the bank is actually conflicted, not so independent in advising you to go for listing. So these are some of the factors that need to be considered before you come on board. Okay, lastly, corporate governance, which we will do a check on the owner, the company, subsidiaries, all the group companies actually, and key management as well, to see whether there's any past conduct that may impair the ability of the company to go for listing. So this one we will do for all the three markets, main, ACE, and LEAP. Okay, this is some of the process of going for listing. I will not go into too much detail. For the main and ACE market, it's pretty straightforward. The advisors make a submission to SC and Bursa. Then the authorities will conduct review, issue queries to your advisors, all through your advisors, and they do site visit of the company. And then once they have gotten the approval, issue a prospectus, go for listing. But for the lead market, it's terbalik, is the other way around. Instead of for the main and ACE, issue prospectus at the end of the day after the approval. But for LEAP, terbalik, you issue the IM first, the information memorandum. So you issue the information memorandum first, then only make a submission to Bursa on the suitability to list. Then once it's approved, then you can list it. That means not like the main market and ACE market where you have to wait a bit to issue the prospectus, then go through the balloting and all that to go for listing. For LEAP, is very fast. You can see the approval period there is 3 weeks. Okay, again, I will not go too much detail in this. Basically, these are the typical listing process. The company pre-submission, the 3-4 months is just typical scenario for a company that's, for example, doesn't have a lot of assets. Software company, for example, doesn't have a lot of assets. It's just computers. It's just the main assets actually the human, the personnel. the staff force. So in those situations, most probably the pre-submission process is much shorter because they don't really have to do evaluation of properties of their office. You know, it is a very simple due diligence. Then it could be shorter than 3 to 4 months. Then the process is about 3 months, but recently Securities Commission has announced the revamp of the IPO process, which is not effective yet. That's why I'm still using the current framework. Whereas going forward, these 3 months could be shorter because it will be left to the advisor how fast the advisor reply on the queries raised by the SC. Then you can get your approval faster. So that is actually good for the market. We are trying to make it more efficient for the appeal process. So post approval, like I mentioned, main and ACE market, they have to issue prospectus 2 to 3 months to update the document, and they can go for listing. Okay. Now for the lead market, okay, it is simpler. It's much simpler. Process for approval is 3 weeks, and then after you gotten approval, straight away you can list. Unlike the main and ACE market, where you're required to issue a prospectus. Okay. This is role of advisors. Basically, the advisors need to assess whether you're suitable to list, and this is based on the guidelines issued by SC and Bursa. For the main market, there is a guideline called equity guideline, whereas the advisors will need to see whether the company fulfill the criteria in that particular guideline. One of it is the profit track record that I mentioned just now. Whereas for the ACE market, although we do not require you to have a minimum size or minimum amount of profit, but we do require you to fulfill certain criteria. For example, whether there are adequate internal control, whether there's adequate risk management within the company, corporate governance, how about the prospects. So all these also need to be assessed by the sponsors, or rather the advisors for ACE market companies. Okay, so the advisors will conduct due diligence, which means checking of all your books and records, then translate that into your offering document, which is the prospectus or the IM if it's for the lead market. So the IM and the prospectus is actually your selling document, So they would need to disclose as much as possible about the company inside there. So in doing that, they also assess what are the value of the company, what kind of value proposition that you can offer to the investors. So this is where they need to talk to you, need to dig, what does the company do, where are the prospects, what is it like 3 years from now, that kind of thing. Because without putting that in the prospectus or in the IM, then investors will not know enough about the company, because they need all these things to decide whether they want to buy shares in your company. Okay, post-listing, this is only required for ACE and the lead market. I mentioned just now because ACE and lead typically for younger companies, so they may not, they may know a lot. The owner of these young companies, they may know a lot about their product. If it's technology, they know about formulation, they know about the chemical mix in a certain product, that kind of thing. But on corporate matter, they may need to rely on their advisors. So that's why for ACE and lead market, we have a period of 3 years after listing where we want advisors to be there with the company. So basically the role of these post-listing advisors is to advise the company on what are the matters that they need to announce, and conduct a review of their quarterly report or half-yearly report before it's being announced to the public. Because due care must be there before you announce significant matters, for example, your quarterly result, or your annual report, annual result. So it must be reviewed by someone to make sure that is properly or accurately disclosed. If I can make an example, we have always advised company to invite their advisors, their post-listing sponsors to their board meeting, because if you are not familiar with the requirement of announcement, because all companies, all listed companies actually must adhere to a requirement whereby if there are material matters, they must announce it to the public, so that the public will not buy shares based on rumors. So for example, you have secured a large contract, okay, and this large contract actually is so huge to the company, it can, if it's known to the public, it can actually move your share price. Okay, so you didn't invite your advisor to the board meeting, so no one advised you that you must announce it. You must announce it immediately actually. So the board of directors, not knowing of that, go and tell their friends and family, and they spread to the market. So the next day, these friends and family tell their friends and family and all that, spread to the market, and the share price move. Okay, the share price move, and yet no announcement being made. And you may be familiar with UMA, unusual market activities, which Bursa issue when there are unusual market activities on your share price. So when we issue that, then you have no choice but to make an announcement. So imagine if you do not invite your advisor there, they could not advise you to make an announcement. So it may result in you breaching a listing requirement. So we have always advised companies to invite their advisors to the board meeting so that they can advise the company to do this. Otherwise, you'll be penalized for nothing. Okay. The next one, this common pitfalls or based on our experience in looking at the past IPO applicants, yeah. Conflict of interest, typically SMEs, they have cross-holding. They hold shares in one company at the same time, hold shares in a sister's company. The sister also hold a bit of shares in your company, then cross-holding. You know, when you have a lot of siblings, family members, cousins and all that, that's cross-holding, and all this activity most probably the same. Yeah, for example, you have 5 siblings all involved in property or construction activities. So when you go for listing, you cannot disregard companies owned by your other family members, because under the Companies Act, these are considered as connected parties. You are considered as one. Okay, parents, siblings, children, all considered as one. So when you have this separately, so actually there is a conflict of interest. So the most common issue that we have seen in the past is this area, conflict of interest. So when the company intend to go for listing, it's best to assess the situation and do some restructuring if it's necessary before you can go for listing. Otherwise, when there is a conflict, actually it's gonna prolong your listing journey. Okay, valid license, especially companies with factory. You may not own it, you may rent it. Please make sure that there's valid license for those properties to operate in that particular area for that particular activities. Because we have seen a lot where there are no valid license, or maybe, we are a bit peculiar, or rather in Malaysia, certain states have different requirements. So it's good for you to familiarize with the requirement of that particular state or Majlis Bandaran, because when you do not comply with this and you only realize that you are not in compliance when you're going for listing, because when the lawyers come in to do the diligence and you notice actually you were not in compliance, that will actually delay your listing journey. It's good if you're thinking of listing, take stock, check into your books and records, take a look into all your assets, whether you have all these permits been obtained and approved. If not, then this is the time to obtain for it. Okay, some companies also they have special arrangements with shareholders or customers. For example, they give certain customers, long-serving customers, higher discount maybe, or longer credit period. So this kind of thing is good to put it on paper, because when you make a disclosure in your prospectus or in IM, when it doesn't jive, because other people get only 30 days credit period, but some customers you give them 90 days. So when you try to explain your accounts, it doesn't jive, it doesn't gel. So it's going to make it very, very difficult. So it's good if you put this on paper, formalize the arrangement. And also, when we launched the lead market 3 years ago, we realized, one of the biggest factor that need to be done, or rather one of the first thing that need to be done by SMEs is that, okay, when you go for a listing, your auditor must be those listed in AOB, or rather Audit Oversight Board. So if your auditor is not one of them, you need to change. So now, now we're in August. If your year end is in December, that means your audit December 2019 already passed, gone. So if you intend to list by end of this year, and if your auditor is not within that AOB list of auditors, it's actually something that you need to think through. Okay, because changing an auditor is not simple, it's not easy, it takes time. So plan properly. If you intend to list, plan properly. So either you have to wait until next year where you have to change your auditor to list, or you do a special audit. Okay, so those that's thinking about going for listing, quickly check. Okay, you can check with AOB, you can Google AOB and see who are the list of AOB auditors. There's about 57 currently that you can choose from. So if your current auditor is not part of that and you intend to go for listing, this is a time for you to discuss with your current auditor, I have to change, to will be audited. So at least you start early before your year end comes. Okay, also unrealistic future plan. You have to disclose your future plan in your listing document, because the investors will need to look into this, because they want to know where are you heading, 3 years from now, where are you heading, what do you want to do now? You have 2 branches. Are you expanding your branch, or are you doing a different activity? What is it that you want to do? But please make it realistic. If you're not actually engineers, don't put in your future plan you are actually venturing into engineering activities, that kind of thing. When it's unrealistic, that is very difficult for your advisors and for the authority who sign SC to actually assess your capability in achieving your business plan. So these are some of the examples that we have seen, some pitfalls in the past, which can easily be overcome if you plan properly before you go for listing. So whatever it is, you can consult Bursa, consult my team, because we are in agro marketing. We do meet companies that intend to go for listing, and we give them advice what they need to do. Okay, which we customize, depends on the company, because each company would have their own set of issues. And also, once you have appointed advisors, you should tell your advisors, or you must tell your advisors all your issues, so that they know how to address it. Because otherwise, once you have made the submission, then suddenly certain issues surface without them disclosing it in detail. Then that will put a stop, to your listing plan.
Agree, and it's just like you are sick, you have to go to doctor, right? You cannot hide your whatever symptoms. You have to blunt and transparent to the doctor.
Yes.
Okay. So I think very informative. We really learn a lot on the listing side and all that. And then I'm sure later, right, there's a lot of questions. We will ask you more on the fees that involve. Right, then okay, so here I would like to invite Chris, who is a compliance officer from Koperasi, to share also. Chris, are you there? To share also how these SME go to them, and then
of marketing fund support. And we have been doing this for the last 10 years, almost 10 years. We are pretty much a financing firm. We provide the marketing funds to these projects by members. They have to be our members in order to qualify for the funding opportunity. So, for example, the first project that we started was actually a wellness, spa wellness. That was 8 years back. We took up the portfolio, even though we knew it was challenging. The company was, they were doing about 800,000 revenue a year, but the losses was about 2 million. But who's going to fund this kind of business? But we believe in the story, and we believe in the visions of the founders. That is very important, because that's what investors want to see. Like what Hanita said earlier is very much true, that after you get listed, a lot of people just want to cash out and leave the business. So there's no leaders behind the company. So when we handhold these companies, it's not a 1-2 years project. We handhold them for at least 5 to 6 years. And we have to ensure that once we raise the required capital, the business owner will be able to have that kind of profit tractions in order to return back the investment to the investors. Well, it could be many multiple ways of exits. It could be a form of debt financing. It does quite a fair bit of debt financing. It could also be in the form of equity financing, and it could also be in the form of listing financing. Back to the story of the wellness center that I mentioned earlier on. I think that currently there are no wellness center that is, or spa and wellness center that provides advanced aesthetic that has been listed in the local market. But we have what we call successfully listed them on the third board, just like we did in Singapore last month. But it took us 8 years journey in order to achieve. So my advice to SME is that while you're trying to put in place your what we call your compliance or your processes in order to go to the capital market and tell the potential investors that you have this kind of traction or you have this kind of opportunity to grow, but you must be able to explain to them what are your exit strategy. If you allow me to add further, 4 or 5 years ago, there are many, we call it guru in the market who came out and do a lot of coaching. They charge sky high. They charge sky high up to fees of tuition fee for 3 days, 2 nights kind of, your company can go IPO, you should attend my course. You heard about this 4 or 5 years ago. And a lot of these people, after attending this kind of programs, they actually have this coffee shop talk. They say, hey, my company is going to go IPO. My company is going to go IPO. You hear all these stories. But many of these coffee shop talks, until today, I asked back some of my friends and even businessmen, have any of this company that actually spoke to you 4 or 5 years ago actually went listing among your circle? And most of the answer is not. So they went to the market with a dream that they can go listing and enable the investor to exceed. And then they raised quite a lot of funds. They always started with 3F, I call it 3F, families and friends. Friends, family and friends. So they always move around the circle. And the first 2 years, not too bad, they do quite well. And then people start to believe in them. And then they raise more capital, whether to debt preference shares or whether to equity financing and so forth. That method we are not discussing today. But after that, on the third, fourth years, they couldn't maintain that momentum. And when they couldn't maintain the momentum, the confidence on the company would drop. And that is why a lot of these times these things fail. So I do agree with the speakers earlier that before you go to the capital market, before you engage with, for example, the cooperative, or you engage any registered platform with SC in equity crowdfunding, especially for SME, you need to put your business plan properly in place and the processes. I highlight very much on processes, especially compliance, especially your audit reports, your related party transaction, and also your conflict of interest. All these things has to be floated up very clearly to investors so that they are not caught by surprise. And I say, thank God that until today, we are able to exit multiples of our portfolios, either to management buyback, trade sale, and either to listing. So getting fundings in the market is very challenging, not only because it's caused by the pandemic, but because it's caused by all these people that are offering this kind of dreams 4 or 5 years ago. And these people have actually really what we call more aware that there is so much. I would say that their scam has to be properly managed. So in order for the capital market investor to continue to believe in it. That's my opinion, Max.
Okay. I think from these two speakers, right, we learned one thing. You need to engage a good advisor that really know in and out to help you to smoothen the whole process. And at the end of the day, right, the penalty that you're going to pay if you don't have any good advice, basically it will really kill your business. So we have a lot of questions that we received from the floor. The first question I would like to ask Jay is, okay, now during this pandemic, there's a lot of, that's how we mentioned about the fees. What are the fees that involved? Is it within the reachable of SMEs, or only a certain level of SME are able to go for listing? And then second question is, of course, if they're interested and they're qualified and they have the resources, who should they talk to? Hanita?
Okay, thanks, Max. Okay, when it comes to fees, talk about listing. Fees of Bursa and SC, depending on which market you want to, is actually not the biggest chunk of the fees. The biggest chunk of the fees is actually fees of the advisor, yeah. So for the main market and the ACE market, because you need to sell 25% of your shares to the public, so the cost of distribution of shares is also make up a big chunk of the total fees, as well as underwriting fees. Okay. For the lead market, because you don't have to do balloting, you don't have to do a public offering, because it can be 100% through private placement, so that cost is much lesser. So the biggest part of the fees is actually for your advisors. So when you want to go for listing, beside choosing the best quality advisors that understand your business, yeah. So some advisors which are good they understand manufacturing but may not understand your business, for example, you're in technology. So you need to find advisors that understand your business very well, and also if they can offer you a competitive rate for your listing. So this is something that you need to consider. Sorry, Max, the second question is on...
if let's say the SME need help, right, the person to go for listing, who should they talk to?
Okay. So, before you engage an advisor, because the moment you engage an advisor, most probably they will charge you certain upfront fees, depending on the advisors. You can actually come and see us in Bursa. My team provide consultation fees, consultation service to the company, free charge. So we can meet face to face, or now with COVID, with MCO, we can do a virtual meeting where we can give you a consultation about your issues. You have to tell us what is it that you prepared to tell us. From there, we make an assessment and tell you what is it that you need to do. So we will give you guidance on how to go for listing. For example, you have conflict of interest issue, or you have certain licensing issue, or your business is in such a way that you know it's not, because when you go for listing, you need to identify a core business. But some companies that we've met, they have very activities, they don't know to choose which one. So we can give an advice. Okay, so all this for free. You can actually approach us. I will show you.
Email, yeah. Email, or they can email to.
Okay. I'll share with you the contact. Oops, wait.
But I agree with Cik, because it's just like if you say you are to a dentist, right? So you must talk to the right people and get the right advice, especially when it's free, right? And it's from the very reputable organization.
I'll get back to you on that.
Then ask us questions to Chris. Chris, there's another interesting questions, all right? What is the advantage to seek for funding through Koperasi compared to conventional channels like the bank, right? The interest, or maybe the flow or the timeline? You want to share with us?
We are governed by the Cooperative Commission of Malaysia. Obviously, every cooperative has a taking license and able to channel. Besides that, we also work with multiple VCs and also private equity firms in the market. So as I mentioned earlier, we are partners in the market. So funding that is available. We are proud to say that we manage quite a few hundred million portfolios under our wing. The advantage is that we work pretty much like a VC, right? And also we started as a private equity firm. The reason is because the license enables us to do so. But we work across, as I mentioned, with these third-party firms that is able to provide funding. So banks are mostly what we call lending platform. They lend the money to you so that you can take the money, and then of course you can actually use the money and grow the business. But through a cooperative and also a VC platform that we also own, we are able to do limited partnership agreement. So in the limited partnership agreement, is between the funders and also the funders are the LPs, limited partners, and also with the portfolios, the projects. So the process is much more leaner and faster, whereby it probably takes 2 to 3 months for them to raise that kind of required funds, and then underwrite it on the LP structures, and then channel the funds to the portfolio so that they can use the fund to grow further. I give you an example. We do have a portfolio, which is actually the first Malaysia online grocery app. All right. They are also preparing for listing very soon in Singapore. So we have been with them, hand-holding them for the last 4 years. We have raised quite substantially amount of funds through the limited partnership model. And then the management fee or the service fee, what you asked earlier, are very affordable. Averagely, VCs of private equity company charge about 2% on the funds that they manage totally. So the fees is not very expensive. That includes advisory fee and so forth. But of course, if you go further, then you need to engage a business valuation to do the company valuation. That will be additional cost as well. And if there's any legal documents, that will be additional cost as well. Those costs are one-off costs. But across the board, many planning offices, many corporate offices that is owned by tycoons or businessmen, family offices, and they set up venture firms as well to venture out and use those extra money that they earn to support this kind of startups or SME to go further. So there are plenty of what we call funds in the capital market. But what I mentioned earlier on, business owner and entrepreneur has to remember very well that for them to qualify the funds, it's not only about their beautiful story, but it's also about compliance. It's also about one of the business owner and so forth. So there are many factors in place, but these are the advantages when you get the funds through a third party, any other than a bank. So that's what I'm trying to say.
Right. Thanks, Chris. Okay. There's one more question I would like to ask you. How about the fees and all that? I'm sure is there any incentive that Bursa or maybe are given to help the before you share the team and who you can talk to?
I speak. Okay, last year the government has approved incentive policy market and delivery. It basically is involved in time-based activities, and also those within the criteria of SMEs, which is they are below a certain level of revenue and number of employees. So these companies currently expenses are not tax deductible. So with this incentive period, would be tax deductible. We are waiting for MOF to gazette, which we believe is going to be soon. So those companies at least this year onwards, it's going to be for 3 years. Yeah. So the government has approved this incentive for